welcome. You're watching Closing Trades. I am Snehi Shah. Before we do anything else or take a look at the market, let's get right into the earnings that we've seen just this hour. We've decoded SBI's numbers and we've also spoken to experts about them. Let's put the spotlight on Titan. That came the very minute SBI came out. We've got numbers coming in from Titan as well. In prima facie, it's not looking very good for Titan. The revenue has come in at 23,934 on a standalone basis, but this also has a very strong component of other operating revenue because they have sold significant amount of gold in the quarter gone by, and that is what is leading to an inflated revenue number for Titan. Other than that, the revenue has come in at 17,730 crores from sale of products, so that's in line with our estimates. But if you take a look at some of the other numbers that we've been tracking, net profit has come in at 1,124 crores, lower than our expectation. EBITDA also at 1,715 crores, lower than our expectations once again. The EBITDA margin has only come in at 7.2% on a standalone basis, once again much lower than the expectation of 10% thereabouts that we were expecting to see on Titan. So they also have an exceptional gain of 49 crores. The PAT anyway looks weak, and if you remove this exceptional gain from that, further weakness on the bottom line number. But let's get in an expert on board. We have Mr. Naveen Kulkarni, the CIO at Axis Securities PMS, joining us on the show. Naveen, hi, good afternoon. Thanks for your time. First up, give us your take on Titan right off the bat. It's not looking very good as per our estimates, but what were your estimates that you were building in for Titan, because the stock is doing really well after earnings?
Yeah, so broadly, from the absolute growth perspective, I think the numbers are quite okay. Of course, versus expectations, obviously, we can say that the margins look a little sluggish, and the earnings growth is lagging the revenue growth. So that is a slight area of concern. But overall, from revenue perspective, I feel that the numbers look quite okay. Jewelry segment has done well. Watches, of course, continues to be a little slower, just growing by around 8%. But I'm not too shaken up by the overall numbers, because quarterly margins can be a little off at times. But I would say that these numbers on an overall basis, considering the revenue growth, especially in the jewelry business, ex-bullion growing at around 50%, looks quite healthy to me.
Okay. Since we're talking about the jewelry business, Naveen, I'm trying to get a sense of the EBIT. The jewelry business has achieved an EBIT of 10%. India jewelry business EBIT at 11.1%. The overall EBIT, if you see, of 10% is much below that the guided band 11 to 11.5% that the company has traditionally maintained. How are you reading the EBIT number?
I look at more from an EBITDA perspective. I think that number in double digits, I think so, looks quite okay to me. Again, as I said, quarterly numbers can be a play of also the inventory and what can happen with regards to the margins. But overall, I would say that at the end of the day, Titan is a growth stock, and they continue to deliver on growth, right? So there are very, very few companies which are growing at close to 35-40% on earnings, right? And Titan is one of them. I would say that overall, meeting these kind of expectations, Titan is continuing to deliver a good set of numbers.
Okay, so that's the take on Titan. On that note, Naveen, we'll let you go. Thank you so much for your time. That's the read-through on Titan. Prima facie looking like a weak set of numbers to us compared to what we were estimating here at ET. Now the revenue is in line if you exclude that exceptional item that they have seen of other income gain for Titan this time around on account of the gold that they have sold, and that number has come in around 6,000 crore rupees. Let me pull up the exact number for you. That's 6,204 crores in other operating revenue. If you do not take a look at that, you still have revenue that's in line, but looking weak for the PAT margin as well as the EBITDA. While that was on Titan, let's take a quick look at what the markets are up to at this hour. 0.7% lower on the index, 160-point cut, and now we're even below the 24,200 mark. We have been there for some time, struggling to hold on to 24,152. So continued weakness seen in the market for a second straight day. You have the Sensex that's lower by 0.8%, Nifty Bank lower by about 1.5%. In fact, more than that. Pressure on the financials is clearly visible today. Small cap index continues to hold on to 0.3% gains, but the Nifty mid cap is lower by about 0.2. Well, that's the breadth of the market. Let's shift focus and talk to a management. We have Vikram Solar who's joining us, and we have the CFO of the company, Mr. Ranjan Jindal, who's joining us on the show. Mr. Jindal, hi, thank you for your time. First, let's take a look at your Q4 numbers. We've seen slight margin pressure coming in this time around. Could you break down this quarter for us and help us understand what's next on your margins front?
Thank you for having me. See, this particular business, we should not restrict the lens only to review a particular quarter. The year has been very important for Vikram Solar as a company. The EBITDA has almost doubled in comparison to what it was for FY25. And though Q4 has seen a bit of dip, that mainly was on account of the corresponding increase in cost without a corresponding increase in the selling price to that extent. Going forward, with the DCR market coming in, and now that we have tied up for the long-term supply on the DCR front with a strong distribution network, we expect FY27 to deliver better numbers.
Okay, so you're looking at better numbers for FY27. I'm just taking a look at your profit move on a year-on-year basis. That's up 22%. Margins have seen some pressure like we have been speaking about. Let's take a look at your segment mix, Mr. Jindal. Your IPP is at 69% with EPC at 11% and government projects at 7%. Is this mix going to remain along similar levels in FY27 or can we expect to see some changes here?
So IPP normally occupies the scale of any order book for a company of such scale. But yes, the C&I and distribution business do give a bit of extra margin. So going forward, we intend to increase our focus more towards distribution with the domestic sales coming in.
Okay, and what I also am reading in terms of the earnings, the concentration risk has reduced with increasing volumes in the top 5 client share. That is now at 80%. Can you help us understand what the outlook is on the contribution from your top 5 clients?
So top 5 clients will continue to contribute a major share in the overall order book. This actually vouches the long-term relationship and the quality and the bankability of the product we are into. So they help us ensure volume offtake. But on the balance 50, we keep on having a mix. As I told you, it will be majorly occupied by C&I and the distribution business.
Okay, sounding good. And also you are targeting 100% backward integration by FY30. Is the company on track for this?
Yes, we are. So,
okay.
Yeah.
Okay, so sounding good over there. And I'm seeing you have a lot of planned capacity when it comes to the module segment, cell, wafers and ingots, as well as BESS. Can you talk to us about how all of this is going to be funded? What is the timeline for your capacity expansion?
So, as we can see, the Make in India and the backward integration is being very seriously pushed by the government of India. And we are participating in that drive. Anyways, the ones who do not enter into the cell and wafer ingot backward integration will be out of business. This is an indirect filtration of the ones who are sitting with only module capacity. Going forward, as the numbers say, we will be having a full backward integration. The capex will be funded with a combination of debt and equity both. We have sufficient internal accruals planned to take care of this capex spending.
Okay, so that answers that question. Mr. Jindal, on that note, we'll let you go. Thank you so much for your time and good luck for the quarters to come.
Thank you.
Thank you
very much. Thanks.
Okay, viewers, shifting focus once again to earnings. We've seen SBI's numbers come out and Ankur is joining us from the SBI headquarters to decode what those Q4 numbers look like. Ankur, take us through these numbers.
Yes, so the net profit of State Bank of India, if you talk about the whole year, of course, it is over 80,000 crore. But for the quarterly, there is a net profit of over 19,000 crore. But if you look at the numbers carefully, you will see that the NII, which has come in around 44,000 crore this time, although if you compare year on year, it is up around 4%. But this is slightly missing the estimates of the analyst. Apart from that, the NIM of the bank has stood at 2.81% this time, and even the domestic NIM is below 3%, 2.93%, and the net interest income overall, although it remained lower than the expectation, but it has increased around 4% YOY. If you look at more carefully, the whole bank advances actually rose around 17% year on year basis, with domestic advances growth of over 16%. Foreign advances growth also have also grown over 20% this time. The retail advances contribute to around 17% YOY growth this time, with double-digit growth is there in all the segment as per bank. More importantly, if you talk about the corporate advances, even that has shown an increase of over 15%. The CASA ratio of the bank stood at 39.46%, and retail term deposits too registered a growth of close to 15% or so this time. Overall, the asset quality of the bank has improved 1.49% overall. If you compare with last year, it is an improvement, and even the quarterly basis, there is an improvement, and even the net NPA ratio had remained steady at 0.39%. So overall, inline set of numbers from State Bank of India. But if you talk about NII, that is something which we will ask questions to management. What is the plan there? But a good set of numbers from State Bank of India so far.
Okay, Uncle, thanks so much for taking us through that. You know, there's a lot of divergence that we're seeing on the street right now. Titan, while the jewelry business continues to do well, those numbers on the net profit front and margins are looking weak. Let's pull up those charts, please, before we, of course, talk about SBI's con call. That's about to begin anytime now. You'll also have the Titan con call taking place at 3. But let's take a look at what these charts are looking right now. I want to see what the stock performance is looking at this hour for SBI, because those numbers are looking largely good or in line with the street estimate like Ankur was mentioning. But we're seeing some massive pressure on SBI, about a 6% cut coming in. So we're going to be waiting for the earnings fine print and rather the management commentary to try and understand what's causing all this pressure on SBI. Yes, the net interest income is looking slightly weaker than our estimates, but that's the kind of fall that we're seeing on SBI. On the flip side, for Titan, a stock that is prima facie looking weak in terms of only operational metrics. Yes, the jewelry business continues to do well and the revenue is largely in line. But if you take a look at the net profit and the margin number, it's a miss versus our estimates. Margins are looking absolutely weak, and despite that, the stock is up 6%. So that's the kind of divergence that we're seeing between both of these Nifty heavyweights on the street right now. And because we've seen such massive swings in both directions, the net impact on the Nifty has been absolutely nothing, and it continues to stay as under pressure as it did over the course of the trading day. But on that note, viewers, it's time to slip into a very short break. We'll be right back and take you through some more news and updates and conversations, of course, with our fundamental and technical guests. So stay tuned and we'll be right back. Back with closing trades. Let's take you through all the top buzzers this hour, and Karan is joining us in the show with a list of all the stocks that are in the spotlight, either on the back of earnings or some news and updates. Karan, over to you.
Let's start off with Vikram Solar. The stock is under pressure on the back of the company reporting a mixed set of numbers. While the revenue has surpassed the street estimates, the profit after tax has missed the street expectations. On that note, the company's order book stands north of 8.2 gigawatts as on 31st of March. From a geographic mix standpoint, 87% of the order book is inclined towards the domestic markets, and the company is targeting 100% backward integration by FY30. Diving deeper into the capacity profile, the company is expecting a 12 gigawatt worth of capacity for its ingots and wafers and 15 gigawatt hour worth of capacity for its battery energy storage system. Followed by Thermax. The stock is buzzing in today's trade on the back of the company reporting a good set of numbers. The Q4 earnings have surpassed the street estimates on all fronts. Moreover, the company has reported a quarterly revenue which is at a 13-quarter high level, and the profit for the quarter has improved due to better performance, which was largely driven by the industrial products and the industrial infrastructure segment of the company. On that note, the company's order book stands north of 13,600 crores, and that is up 27% year on year. Apollo Microsystems is also in focus on the back of the company reporting a series of order wins, adding up to 51 crores from private organizations, defense PSUs, and the Ministry of Defense. On that note, the company's order book stands north of 1,300 crores with a book-to-bill of 1.7 times the 12-month revenue. Sonata Software is also in focus. The Q4 earnings have delivered a beat across multiple fronts, wherein the profit has increased by 25% and the margins have expanded sharply. Moreover, the company has registered a strong international business performance with large order wins. And finally, we have Craftsman Automation in focus as the stock is extending gains for the second consecutive day. The company has reported a strong set of Q4 numbers, wherein the EBITDA has jumped 47% with a sharp margin expansion. Moreover, the profit has increased by 74% year on year as the company steps up the expansion and the capacity building plans.
Okay, so that's the news. Those are all the stocks that are in news as we speak at this hour. We've got some more numbers coming in from SBI, and there's further pressure on this stock. Let's put up that chart, please. It's a 7% cut coming in on SBI. The domestic NIM number has come in at 2.93%. Just taking a look at what the NIM expectation was, around 3%. So, okay, slightly weaker than, nominally weaker than what the street was expecting. But we also now do have the slippage number coming in for SBI, and that number has come in around 22,678 crores for the entire year. That's the kind of slippage number that we are looking at for SBI at this hour. So further weakness on the stock. It's now lower by about 7%. We have Kunal in the studio to make sense of the kind of numbers that we've seen from both of the heavyweights, Titan as well as SBI. Kunal, let's start by talking about SBI. You know, major heavyweight in the Nifty Bank Index, a 7% cut on SBI, and that's tanking the overall Nifty Bank Index lower as well. Talk to us about how SBI now looks on the chart. Is this 7% cut an attractive entry point now?
Yeah, it's a very deep gash for SBI, and it has a direct impact on the Bank Nifty as well as on the benchmark analysis Nifty as well. And surprisingly, I think SBI is contributing almost 400 points to this 800-point downtick for the Bank Nifty, and I think around 70-75 points on the Nifty. I think at current terms of 1,000, if you ask me in terms of price level, I think it's a good zone to try and go for a contra buy on SBI. I'm not sure how the results are. Just looking at the market reaction post the results, the expectation is that the stock may drift a little lower, but price-wise, I think that this 995 to 1,000 odd level for SBI seems to be a good support zone where the stock has tapped back into.
Okay, so that's on SBI. Kunal, a chart check on Titan as well. That stock is also higher by about 5 3/4. In fact, it's now about 6% higher. The numbers don't look that great on an operational basis. Yes, the jewelry business continued to do well. Revenue was in line. But all the other metrics, including PAT, you had your EBITDA and EBITDA margin, they were a miss versus their estimates. Nonetheless, the stock is doing really well. How much more upside for Titan on the charts?
Well, in fact, Titan has actually come back towards a breakout of the previous resistances. When the move started off in the last, I think, few weeks for Titan, the stock made a high of 4,550 on the spot levels. Today, it's crossed above those levels of 4,550 mark, which means it's crossed back above a major technical resistance for itself. Now, what matters over here is the closing based as well as the F&O data for Titan, because if in case end of the day we see that the stock prices close above this 4550 mark, and if the open interest built up is on the higher side, then we can expect that maybe this could be a strong indication of a long built up formation for Titan, and then we can expect a carry forward up move. But I'll just wait for maybe another half an hour, 45 minutes, for the data to pan out. And once I think we get a more clarity of that, even if the stock is at 4550 mark where it's trading right now, that could be a better zone to go for a buy. But I think I will just wait for another 30-35 minutes.
Absolutely. And on the fundamental too, it makes sense to wait and watch for the next 30 minutes because you have the Titan con call that's going to commence at 3 o'clock. So it's going to be very important to see what the management is going to be talking about. What's their outlook on gold? How much of this uptick that we're seeing in the revenue and overall momentum is led by volume versus value, given that gold prices were volatile in the quarter gone by. So lots to talk about and lots to discuss. So we're going to wait and watch and see what the reaction on these numbers is. But yes, absolutely take a look at the two Nifty heavyweights going in contrasting directions. About a 6% uptick on Titan and 7.25% now lower on SBI. So that's the kind of move that we're seeing. But let's refocus from both of these stocks and talk about yet another basket of all the stocks that are looking good on the technicals. Kunal, anything that looks good, your stock picks this afternoon?
Yeah, there are a couple of names which are looking attractive on the short-term charts. First of them is AU Small Finance Bank. That's a chart which I think at 1,040-45 levels is looking a little bit more attractive. You're seeing a breakout of sorts for AU Small Finance Bank, the stock coming back into a swing breakout mode. So we'd look out for 1,065 as a BTST target, stop loss at 1,030. The second is about M&M Finance. Now, after a decent correction a few weeks back, the stock at 335 plus levels is also coming back into a breakout or a recovery mode. the risk reward is a little bit more better for M&M Finance at the current juncture. So we'd look at a target of 350, stop loss at 328.
Okay, AU Bank and M&M Finance, both names from the financial baskets looking good to Kunal right now. Let's refocus from the technicals to the fundamentals once again, decode the kind of behavior that we've seen in the markets in the near term, and importantly, what lies ahead, what should one be expecting when there is so much at play. There's global macros, there's geopolitical uncertainty, there's our earnings trigger back home as well. So much is at play. What should you be making of the market? We have Mr. Dikshit Mittal, the Senior Fund Manager of Equity at LIC Mutual Fund, joining us on the show. Dikshit, hi, good afternoon, and thanks for your time. And let's get straight to it. How are you reading the market momentum that we've been seeing over the last couple of weeks? Nifty continues to be absolutely range-bound, barring the one or two good trading days that we have when there's a positive geopolitical update coming in. But other than that, we've been absolutely lackluster. How have you been looking at our markets back home?
Yeah, good afternoon. Thank you for inviting me to your show. So basically, as you rightly mentioned, index has been range bound, maybe not only for the last 2-3 months, but I would say last 2 years. But I think most of the action which is happening, which is outside the index, so the kind of earnings that we've seen by the mid cap and small cap stocks, I think that have been quite encouraging. And I think market has become quite stock and sector specific, and wherever we have the good earning growth visibility, I think market is rewarding those stocks. Coming to the index, because index is heavy with the large 2-3 major sectors like banking, IT, which are facing some kind of, you can say, growth slowdown or earnings slowdown. I think that is reflecting the overall index performance. But I think on an overall market, I think market is quite bullish, quite constructive, and market is rightly rewarding the companies who are reporting good numbers.
Okay, so that is on your reading on the markets. And Dikshit, also talk to us about how have you been seeing the earnings season pan out? We're halfway through it. What has been your reading? What is your view on some of the heavyweights from the Nifty as well as the broader end of the market? And more importantly, given that we still have one half of the earnings season to look at, do you believe that the momentum could improve going ahead?
Yeah, I think so far earning has been quite decent. We have not seen any major negative surprise, to be honest. And one would argue that most of the impact of this geopolitical situation can be felt in the first quarter FY27 onward. But so far, at least for the fourth quarter, we have not seen any major negative surprise. And I think on the index level, I think 6-7% growth on an aggregate level has been reported by the companies, and which has been in line with the expectations. So I think going forward, we still have a full year to go. We are still in the first month of the next financial year. And we are hopeful that if the ongoing geopolitical issues are resolved, maybe in the short term, maybe in next 10-15 days. So maybe from second quarter onwards, we'll see good revival in the earnings. And we are hopeful that at least for the next 2 years, we can see double-digit earning growth. And anyways, market is now basically trying to factor in next 1 year's kind of earnings. So if we look at FY27 or FY28, I don't think there is any material impact as of now of all these issues. And looking at the valuations, market is trading below long-term averages in terms of the P multiple. Earning growth is slightly picking up as compared to last 2 years, because last 2 years earning growth has been sluggish in the mid-single digit. And I think the next 2 years earning growth can pick up materially, led by banks, consumer sector, as well as industrials. So I think over an overall basis, if we take more than 1 year view, markets are looking good, both from the fundamental basis as well as from the valuations perspective.
Well, today, of course, the earnings reaction on both SBI as well as BSE are really cases in point. In fact, SBI is seeing the sharpest fall it has since budget day, when it fell about 8%. SBI intraday graph should just come off for you on your screen. 7.25% lower right now on the futures. Dalmia Bharat, Dixon, which is down about almost 4% right now. Inox Wind is down 3%. Britannia is down 6%. Britannia, of course, was a mixed bag. And it's not just SBI. Look what's happening in the private banking space. Look at an HDFC bank. That's down 2% right now. Axis is lower by 2%. And then L&T, which has also eased off since its earnings, that's also lower by about almost 1.6% or so. Kunal, what are you making of the Bank Nifty construct in light of the fall on SBI right now?
I think it's a buy at current levels. 55,000 is where we've tested for Bank Nifty on the spot levels. I think it's a very good zone for contra traders to enter into the index over here. We are at a point where the markets are definitely at the cusp of a turnaround, and I think these kind of dips which happens on the indices, even if it's on the back of one particular result for a larger cap major from the banking index, I would still believe that that's an opportunity for short-term traders to try and enter into the index at least. May not be, I think SBI could be something which could take some bit of more time to show signs of recovery, but largely I think as a banking index, this could be a very good time to enter.
That's for the index, but what about individual stocks? Would you look to buy SBI on this decline?
Yeah, so I think from an investment perspective, I think it's a good time to try and chip into this name at 1,000 levels for SBI because, given, the pedigree of the stock and the kind of returns the stock has shown over the last many, many years, it just looks like that the structure for the stock is still on the bullish side. Yes, you might probably have seen the stock entering into the results also on a slightly underperforming spree. I would not say a very sharp corrective mode, but it underperformed many of the other private sector banking names also, I think, in this leg of the price uptrend for the bank Nifty. So I think at 1,000 levels for SBI, I think it's a good zone for long-term investors or medium-term investors to start nibbling into the stock.
Okay, so that's on SBI, and Kunal believes it's a good time to make a fresh entry into the stock given the kind of gap down that we're seeing on the stock right now, 5.5% of a slash over there. In fact, we have the management of SBI who's addressing the media. We'll cut right to it. Before that, I'm just going to take a look at some of the updated numbers that we're getting from SBI. Slippage at 0.54 for the year. And in terms of the amount that we were talking about earlier, it's 22,678 crore rupees of slippages in the year gone by. In fact, let's cut across and listen into the management themselves.
Deep appreciation, the continued trust placed in us by our customers, shareholders, partners, and the broader financial ecosystem. This trust is not just an enabler of performance, but also the foundation on which we build enduring value. Let me start with a brief description of the present global and domestic economic scenario. We are meeting at a time when the global economic narrative is being rewritten in real time. Global growth is projected at 3.1% in 2026 and 3.2% in 2027 by the IMF, reflecting a phase of moderation amid persistent geopolitical uncertainties and evolving trade dynamics. In contrast, India continues to stand out as the fastest growing major economy, with growth projected at around 6.9% for FY27 by the RBI. This resilience is being driven by strong domestic demand, improving investment activity, and policy stability. However, we remain mindful of emerging risks. Recent geopolitical developments and weather-related disruption, such as El Nino, may introduce some downside risks to growth. On inflation, CPI is expected at around 3.8% in April, with a full year projection of 4.6% for FY27. That said, global energy prices and climate-related factors may create some upward bias. From a banking system perspective, credit growth remained strong at 16.1% in FY26, while deposits grew at 13.6%. Encouragingly, this momentum continues into FY27 with credit growth at 15% as of mid-April compared to 10.3% last year, and deposit growth standing at 12.2%, up from 10.2%. Looking ahead, we expect credit growth in the range of 13 to 14% and deposit growth at 11 to 12% for the whole system. Asset quality across the banking system remains robust and capital levels are comfortable, providing sufficient headroom to support future growth. Alongside these traditional indicators, two structural shifts are redefining the operating environment for banks. Recent developments in advanced AI models have highlighted the increasing sophistication and speed at which vulnerabilities can be identified and exploited. This has placed the Indian banking system on a heightened state of alert. The industry is working closely with the Government of India and the RBI towards a coordinated cyber resilience framework. Secondly, the RBI's guidelines and transition to expected credit loss-based provisioning from April 2027 mark a significant step towards strengthening balance sheet resilience. At SBI, we are well prepared for this transition. Against this backdrop, Our strategic focus is to drive high-quality growth with simplicity and resilience at the core. We are consciously moving from a paradigm of scale-led expansion to one that emphasizes productivity, capital efficiency, and risk-adjusted returns. Every strategic initiative we have undertaken over the past year is anchored in this shift. We are deeply aligned with the vision of Viksit Bharat as we continue to see ourselves as a systemic enabler of India's growth story. Our long-term strategy is therefore designed to be both commercially sound and nationally relevant. A cornerstone of this transformation is Project Saral, which I mentioned earlier also, our operations process reengineering initiative, which is a structural reset. Having launched the first wave of identified themes, it challenges legacy constructs and reimagines the bank through the lens of simplicity and customer centricity. Key initiatives from the first wave include universal branch access, dismantling the traditional home branch mindset, single KYC across products, and automation of back office processes such as inward clearing using GenAI. Parallelly, we are investing deeply in becoming an AI-first organization. Through our Analytics 2.0 initiative, we are embedding AI across the value chain, moving towards a truly data-driven operating model. In response to increasing financialization of savings, we are deepening customer engagement through YONO, ecosystem banking, and targeted offerings for diverse customer segments. We are also actively building relationships across startups, AIFs, VCs, and global trade ecosystems to diversify and future-proof our portfolio. As the largest bank in the country, our responsibility extends beyond performance to stability. Our centralized cyber cell operates 24/7 as a unified command center, reinforcing our commitment to secure and resilient banking, combining technology and human expertise to respond swiftly to cyber risk. Each of these initiatives is designed to deliver measurable gains in efficiency, stronger risk controls, and sustainable profitability. In the above backdrop, let me now give highlights of the bank's performance in FY26. I'm glad to announce that we have posted highest ever net profit of 80,032 crores, an increase of 12.88% year-on-year in FY26. Operating profit for FY26 increased by 11.25% year-on-year to 1.23 trillion. ROA for FY26 is at 1.12%, an improvement of 2 basis points on year-on-year basis. Return on equity for FY26 remained robust at 18.57%, despite raising of 25,000 crores equity capital in July 25. Domestic NIM was at 3.03%, supporting our guidance to maintain NIM above 3%. I'm happy to share that our total business has crossed 109 trillion rupees, reflecting customers' continued trust in us. In fact, our domestic business has grown by more than 11 trillion on year-on-year basis. Our balance sheet size has crossed 76 trillion rupees. Bank's total deposits have grown by 6 trillion rupees at 11.03% year-on-year to 59.76 trillion rupees. Retail term deposits have grown by a robust 14.77%. Savings account deposits have witnessed a growth of 10.6% year-on-year, and CASA deposits have grown by 9.53% year-on-year, with the CASA ratio at 39.46%. We've been able to improve our CASA ratio by 33 basis points on quarter-on-quarter basis. The deposits growth remained healthy, with growth in double digits, despite competitive market environment. Deposit our foreign offices have grown at 12.7% on year-on-year basis, but in USD terms, it is 2%. Credit growth has been robust, and all segments have registered double-digit growth. In FY26 and on year-on-year basis, domestic advances grew by 16.33%, driven by all segments, SME by 21%, agriculture by 20%, retail personal advances by 15.22%, and corporate advances by almost 15%. Retail, agriculture, MSME, popularly known as RAM portfolio, has crossed 27 trillion rupees with year-on-year growth of 17.11%. Our foreign offices have continued to perform well with growth in advances at 20% year-on-year. In USD terms, it is 8%. The domestic credit deposit ratio was 73.08% at the end of FY26, an improvement of 337 basis points year on year. The bank has enough headroom to address future credit growth requirements. Our asset quality continues to be healthy. Our gross NPA ratio has improved by 33 basis points year on year and stands at 1.49% as at March 26 and continues to be at its lowest level in over 2 decades, which demonstrates the quality of our loan portfolio, proactive management, structural integrity, robust underwriting capability, and sustained recoveries. Our net NPA ratio has also improved by 8 basis points and stands at 0.39%. The consistently improving asset quality is also reflected in our credit cost, which is at 0.37%. The NPA book is well provided with PCR at 74.36%. The bank remains well capitalized and we have sufficient headroom to take care of business growth requirements. Our capital adequacy ratio has improved by 115 basis points year on year and stands at 15.4%. CET1 ratio has also improved by 148 basis points to 12.29%, and both the ratios are well above regulatory requirements. Digital adoption is central to our vision, enabling a multi-pronged transformation focused on enhancing customer experience while optimizing costs. By shifting 98.7% of transactions to alternate channels, we are scaling both efficiency and growth. The successful rollout of the new YONO platform has become a massive acquisition engine with over 4 crore users in just 3 months' time. Now, YONO has more than 10 crore registered users. 66% of new saving accounts originating on YONO platform in FY26 demonstrate our successful transition to a digital-first institution. We are effectively meeting the evolving needs of new generation and a diverse nationwide customer base through our formidable physical and digital channels. Our subsidiaries continue to perform strongly and remain leaders in their respective segments. They are important drivers of value creation, and we will continue to nurture them. If I were to summarize our approach, we are building a bank that is simpler in processes, smarter in decisions, stronger in balance sheet, and sharper in customer focus. We are proactively strengthening our CASA base and empowering our workforce to lead in a transforming financial landscape. We are actively reshaping our balance sheet by enhancing digital capabilities, broadening funding resources, and leveraging YONO for customer acquisition. SBI, by virtue of its scale, has always been a reflection of the Indian economy, and we aspire to not just remain a participant, but to become a key enabler of that journey. To conclude, I would like to thank all of you once again for your continued engagement and support. We remain committed to delivering sustainable, responsible, and long-term value. As India advances towards its aspirations of becoming Viksit Bharat, we take pride in playing our part in that transformation. Thank you for being with us today. My team and I will now be happy to take your questions. From the presentation, we have grown across the segments. Corporate advances in double digit. We are continuously seeing that credit growth in the current quarter also, which gives us confidence that 13 to 15% credit growth is eminently possible.
So my second question is on your net interest margins. They've seen a sharp dip, and I guess that's the reason why stock has taken a hit to today. Wanted to understand if you could just explain the dip in the number, and can we safely now say that the worst for margins is now over, the bottom is now here?
I think in the last quarter, in Q3 also, we did mention that a couple of rate cuts which have happened in December, middle of December, have not been fully taken in the EBLR book. So that is 25 basis point cut in December, and also we had a 5 basis point MCLR cut. That's one main reason where EBLR book got repriced. The second thing is, there's been a substantial growth in the EBLR book itself. if you have seen both home loans and MSME, which are essentially linked to the ABLR, that also has contributed to the NI reduction. While we have been very successfully containing the cost of resources, in fact, the cost of resources has come down over the last quarter. And the NIM guidance, what we have given, exit NIM of 3%, I think we were able to fulfill that. And we have given this guidance that the NIM will be, exit NIM will be 3%, and that has been achieved. This year, we still continue to provide the guidance of NIM of above 3%.
For next question, Zoel Rebello from Economic Times, please.
Good afternoon, sir. Sir, other income has fallen quite sharply. I'm assuming that's because of treasury. Mostly, I have not seen the presentation very closely, but can you give us some details on what treasury income? And also on the forex side, we had some regulations from the RBI in March. So how did you all manage to, tide over that?
I'll answer the second question first.
And then treasury also.
Treasury. On the NDF-related guidelines, we were able to unwind the portfolio of $5 billion what we had with minimal loss. The loss on account of unwinding was 57 crores only. So that has not contributed to any major forex income losses. But we did have valuation of derivatives and swaps, what we normally do for proprietary requirements. That has resulted in forex losses. So the overall treasury losses consist of your bond yield movement, which has sharply moved in the last quarter. That is about 1,800 crores. And then we have on the equity side about 2,000 crores. And on the forex derivative side, around 15. Overall, the treasury losses were about 4,500 crores. Sorry?
That's why
other income is there. Otherwise, if you see the other sources of, non-interest income, every segment has gone up. I think you can pull up this slide on fee income. Both on the ACA recoveries, fee-based income, loan processing charges, every segment of other income have shown a significant growth over the last year and even over the last quarter too. Yes.
Sir, no, because you all are expecting a good growth. Still, because despite the challenges on inflation and like you mentioned, West Asia and all that, you all will need funds, capital. I know that there's a board meeting set. If you could just throw some light on how you all are going to plan for the year ahead.
So on the equity capital side, if you see our CRAR is about above 15% now. So this CRAR will give a headroom of almost 12 trillion rupees to be supported. I think on the capital side, there is no requirement of any additional capital to be raised. And a significant profit accruals are also there. And with a change in the guidelines where you can book quarterly profits and which get added to the capital structure, that provides a continuous basis for us to grow the book. I think on the capital side, there is absolutely no concern. And we don't intend to have any new equity capital raise anytime soon.
Hamsini from Manikapur, please.
Hi, sir. Good afternoon. So just one clarification before I ask my question. This 13 to 15% credit growth that you have factored in for, does it also include the ECLGS drawdown that will happen, etc., which is giving you the comfort to maintain that kind of a guidance? Because most of the banks, even the large private sector, they've either refrained from giving any guidance or they've reduced their guidance. So just want to understand.
So ECLGS, though there is a potential of 70 to 80,000 crores, what I mentioned yesterday, my belief is that not full amount will be utilized. This is an opt-in kind of thing. We're not saying that people are, eagerly looking forward to this facility, but it's a very proactive measure what government has taken. So it is available. The facility is available, and from SBI assessment, almost 70 to 80,000 crores worth loans can be taken. My assumption is that 30 to 40% people probably would avail in the best case scenario. We assume that the conflict will not linger for long, and the demand for ECLGS probably would be lower than what we anticipate. By this 2.55 crores, what Government of India assessment is outer limit, and our own 70-80 crore limit is also outer limit. So we have not based our 13 to 15% growth rate on the ECLGS at all. We think that is a natural progression, and even if assuming that in some sectors we are unable to grow, probably this ECLGS will contribute to achieve this 13 to 15% growth rate.
Okay, that's the SBI management, and we will keep cutting across to that management chat. Just looking at the market texture, and we're closing in the week with that 178-point downtick on the Nifty as we speak right now. We've been flagging off that today, single-handedly, names like SBI, HDFC Bank, Axis, they've been the drag points for the Nifty. In fact, you could add to that even an ICICI Bank or an L&T also for that matter. But look at names like a Titan that spiked up about 6.5%, even though the numbers fell short of market expectations. Asian Paints has seen a 2.5% uptake. Apollo Hospitals has been a very strong show from the word go today. And then in bits and starts, you're seeing some of the IT names as well hold out, and HCL Technologies, TechM, Infosys are shades of green. Reliance, a little bit split and divided, marginally higher as we speak right now. And I marginally say marginally only in context with what names like a Titan or Apollo Hospitals, for instance, are up to. But I think the one standout factor, and Kunal, correct me if I'm wrong here, through this week has been the broader market outperformance and the fact that, the mid-cap 100 index managed to hit that record high for itself. And you're mesmerized seeing moves on an NBCC, on a Coforge or Novama, which is up over 10% right now.
Yeah, Shine, in fact, you look at the day like today, for example, at one point, the Bank Nifty was down some 1,000 points. And if the advance decline ratio is 1:1, almost 1:1, that tells you the strength of the market or the breadth of the market. And that, I believe, has been the hallmark or the feature of this rally in the last 5-6 weeks for the markets. And I think it looks like that, that the mid caps and small caps are completely unfazed with what's happening across the larger cap names and the benchmark indices. I think there's been good amount of volume back buying which is happening into many of these mid caps and small caps. In fact, one of the data which I was looking at, at the heat of the market correction 1.5 month back, end of March, we were at a point where almost 92% of the stocks in the small caps and the mid caps, they were trading below their 20, 50 day moving averages. That data is reversed completely, and now we are at a point where almost 84 to 85% of the stocks are trading above their 20 and their 50 day moving averages. So that itself tells you the kind of market breadth recovery which you've seen across over the last 5-6 weeks.
In fact, let's throw some more light on what's happening in the F&O universe, and Sajid joins in for F&O 360.
Thank you, Aisha, for that. There is a lot of call writing which is happening at 24,200 level as we speak. There, the index, as you see, the Nifty is down nearly 0.4%, but open interest up nearly 2.68% in today's trade with the premium at 47 for the Nifty futures. Nifty Bank is something where we are seeing some kind of pain, which is there. It's off days low, but still down 1.24%, and the open interest jump there 8.73%. So a lot of shorts getting added in that, and that's getting reflected in the the constituents of Nifty Bank as well, where we're seeing private sector banks adding a significant open interest, which in terms of shorts, you have HDFC, ICICI, and Axis seeing a short build up. SBI, the stock is down nearly 6%. Open interest up nearly 17.6% in today's trade. So a lot of open interest getting built up on SBI as we speak, except for Kotak and IndusInd, where we are seeing and AU Small Finance, where we are seeing some kind of long build up. We are seeing across the board a short build up coming in from all the banking space. Look at what the put and call writers are doing. You have 24,200 where there's a lot of positions getting built up for the market there. And if you look at the distribution chart, you will get to see that that itself is coming as a good resistance for the market. There's some build up of puts in 24,000 and 24,100, and that's holding up the market today as compared to what the Nifty Bank is facing today. Futures gainers, Nuvama, you have a long build-up happening. Coforge is seeing a short covering. Titan is seeing a long build-up. Nuvama is up nearly 9% and Titan is up 5.4% today. If you look at other stocks in the losers, Dalmia Bharat short build-up happening. The stock down 7.45%. SBI is down 6.9%, dragging the Nifty Bank Index, and Britannia is down after the earnings, down 6% in today's trade. Among the open interest gainers, you have Nuvama again, a jump of 37% in open interest for Nuvama. Kalyan Jewel is seeing a jump of 25% after the numbers just came in. A lot of build-up of open interest coming in, long build-up happening in Kalyan there, and Britannia is seeing a short build-up with 21% jump in open interest. Among the losers, you have stocks like Inox Wind, long unwind seen there. Polycab is seeing a short covering, and Wadi Energies is seeing a short covering at this point in time. Most active today, it's SBI 1100 May call. That's the most active one. Look at the open build-up which is happening there. 1.18 crore shares getting added there. Stock down 76 and the premium down nearly 1835. Britannia 5500 May put is also another active candidate in today's trade. 86 rupees up in premium to 127.95 and 80,000 contracts getting added there. The stock down 358 to 5501. So it's banking day today with a lot of shorts getting added in many of the banking stocks, especially private sector and public sector led by SBI today.
Okay, Sahid, thanks so much for taking us through that. So that was FNO 360 powered by 5paisa. But on that note, it's time to slip into a very short break. We'll be keeping the market conversation going on the other side, so stay tuned.
Back with closing trades right here on ET Now. Forget the index. It's really about, those individual names today. And what you're now peculiarly seeing is that it's turning out to be a sell-on earnings kind of market. Look what's happening with SBI. Look what happened with BSE, or for that matter, even with names like L&T, etc. So yes, the banks are a little bit under pressure, but it's peculiar the way SBI has fallen after its numbers. 6.5% of a cut is what you're seeing on SBI. Titan numbers, on the other hand, didn't quite match up with the street estimates, but that's a completely inverse reaction. 6.5% up in the green for that stock. And then there are, of course, other, crude sensitives, IT names, which are also seeing some bottom fishing, which they continue to do sporadically. Sudeep Bandyopadhyay as well joins in on the show right now. Sudeep, hi, good afternoon. Good to have you on the show. Sudeep, looking at SBI's reaction after the earnings, it seems that the market was sort of priced to perfection post those March lows, and even digesting earnings and where you're likely to see good earnings come by.
Well, I think market wanted to sell. They wanted to book profits or whatever it may be, because I don't find anything drastically wrong with SBI numbers. Yes, the slippages are a bit more than what it was last quarter, and I think as opposed to a 4,400 kind of number, it's come to around 5,500. So that's the only thing which you can find out. Otherwise, the largest bank in the country have grown, has a credit growth of about 16%, which is beyond the industry level. Have delivered 3% NIM on a domestic business, which is absolutely in line with what they had told and what the expectations was. The cost of credit has come down. NPAs are under control. All the other parameters, if you look, deposit growth, CASA, I think, the bank has performed exceedingly well, and it trades at 10, 11 times earnings. So it's definitely not a bad buy even at current levels. So, people who are selling must be booking profits. That's what my conclusion would be, Ash.
So that's the strategy at this hour. Sudeep, thanks so much for that and the take on SBI. But let's also bring on board my colleague Meryl, who's joining us with a list of all the stocks that are in the spotlight at this hour. Meryl, over to you.
Yes, these are a few stocks that we've seen buzzing in today's trade, mainly on the back of their fourth quarter results. Now, starting off first with Thyrocare, the company's seen quite a good performance this time around. Revenues up 19.7% for Thyrocare, with profit more than doubling. That's up almost 128% on a year-on-year basis. The management has seen is now expecting investments to start contributing for FY27, and they're expecting the specialty diagnostic business to boost growth overall for the company, which is showing quite a positive trend for the company going forward. And next up on our list is Vijaya Diagnostic Centers, also performing very good this time around. Revenues are seeing up almost 26%, and profit after tax has risen almost 37% on a year-on-year basis. The company's EBITDA margins as well have expanded over 400 basis points. Quite a pretty good sign for profitability in Vijaya Diagnostic Center as well. Moving on, Ola Electric today is buzzing in news. The company has just gotten government certification for its S1X Plus scooter range. Now, this range offers a 320 kilometer range at a 125 kilometer per hour top speed. And this marks a major milestone not only for Ola Electric, but for mass EV adoption in India as well. And we're seeing the stock react in a positive way in the market as well. Moving on, Lloyd Enterprises is in focus as well. On the back of their fourth quarter results, they've recorded significant gain in other incomes. This was around 350 crores, and this includes income from strategic investments as well as treasury activity, which is favoring the company's profit after tax metric. Their company subsidiary Lloyd Engineering as well has recently reported the results, and the parent company Lloyd's Enterprises on the back of this is seeing a quite favorable outcome in today's trade.
Okay, so that's on some of the stocks that are in focus right now. Some earnings reactions that we've been seeing on something like a First Source Solutions. Let's pull up that stock because the last time I took a look at that one, it was up 17 to 18% on the back of some very good numbers, continues to be there. 16.5% uptick on First Source. You had an Utkarsh Small Finance Bank that came out with its numbers too. Largely good set of numbers, 3 to 4% uptick on that one as well. Kunal, a chart check on something like a First Source. Look at the kind of run up that the stock has seen after its earnings, and in fact on the flip side Utkarsh has subsided entirely. But let's talk about First Source.
Yeah, I think First Source, after this breakout above 14-15% for the stock, it looks like the stock has come out of a resistance of sorts. The previous resistance for the stock was around the 250 to 260 mark. It's broken past about those levels. Volumes are excellent for the stock. I think comparatively this is one of the best day volumes for FSL, First Source Solutions, comparatively over the last, I think, 1.5 odd year for the stock price. So this tells you that maybe this could be a sign of a big turnaround for the stock in the near to medium term. And historically, I think we've seen that whenever stocks go into such kind of a strong volume-backed up move first, there is a mild pullback which happens over the subsequent next couple of days. But that actually becomes an opportunity for investors to try and enter into the stock price. So it's currently at 274. I think dips closer to 260 should be bought into.
In fact, not just First Source, look at Coforge and what it's done after its earnings as well. It's been a double-digit move on the stock, and I think it was up about 10% yesterday. Today, it's up another 7% as well. But hear it out from the executive chairperson of Biocon, Kiran Mazumdar-Shaw, saying that her niece, Claire, is going to be transitioning as a chair over the next 5 years. She also added by saying that Claire will gradually work alongside the current leadership team. And how this transition is going to pan out, let's listen in.
For me, it was very clear that I was grooming my niece, Claire Mazumdar, to ultimately take over from me. And, I have basically seen her grow into a very successful entrepreneur at Bicara Therapeutics. I think she's done an outstanding job raising capital, taking the company public, and managing the asset in a way that she's got a breakthrough designation. And I think she has earned her stripes in that sense. I give her about, I think, 5 years in which I can hand over charge to her. In that time frame, obviously, I would like her to work alongside me and understand what this business. She does understand the business very well because, having grown up, as my niece, she understands Biocon very well, and she's very emotionally linked to Biocon because of that. And I think, therefore, I think she's a very worthy successor. And we have adequate time in which for her to basically step into my shoes. So not immediately, but certainly over the next 5 years, I would like to start, slowly kind of transitioning out of this chairman's role and hand it over to her.
There's no doubt on the capability of Claire, but because she's herself is an entrepreneur and has taken the company public, how easy will it be for her to leave that and come to Biocon, or is it going to be will you bring her firm also into your fold as part of the entire transition?
No, I think Bicara is a standalone company which Claire has created. As I said, it was a wholly owned subsidiary of Biocon when it started, but today we barely have 10% of Bicara's holdings. And I don't think there would be any strategy to bring that back into the Biocon fold because it's a company and entity on its own. And Claire will be given that 5-year period to transition out of Bicara.
Okay, so that's the word coming in from the top boss at Biocon, not hanging up her boots just yet, but seeing Claire Mazumdar, her niece, taking the leadership ahead in about 5 years or so from now. That's the word coming in from Kiran Mazumdar-Shaw of Biocon. Sudeep, give us your thoughts on the entire pharma pack. We've got earnings to look at. We've got the entire semaglutide opportunity at play right now. We've got acquisitions that are happening, Sun Pharma being the biggest one in that space. With so much happening in pharma, what's looking good to you at this point?
Well, overall, pharma does look good to me, and I've been mentioning that to the investors over the last 6-8 months. Indian pharma is at the cusp of a takeoff, and there are excellent opportunities still in Indian pharma. Probably pharma is where IT was 20 years back, and we will see a lot more excitement, a lot more action in Indian pharma. There is absolutely no doubt in my mind about it. As far as the specific things which are happening in pharma, you talked about acquisition. I think Sun Pharma's acquisition of Organon is definitely a game changer. Look, Sun Pharma will be having about 70% of branded products going forward, and it won't depend on generics and APIs. It will have 70% branded portfolio. It's a different ball game altogether, and that way it's completely differentiated company now vis-a-vis other Indian pharma companies. Some of them are trying in a small way, including Glenmark, but Sun has moved into a different league with Organon acquisition. Apart from that, we do like, valuation-wise, we do like Aurobindo Pharma as well. I think it does look interesting at current valuation. Regulatory challenges are also kind of getting resolved over the last, got resolved over the last few months. So Aurobindo Pharma is what we like. We do like domestic pharma companies, that is, companies focused on domestic businesses. Mankind Pharma has been our preferred stock for a very long time, and we continue to like that.
Okay, that's that on pharma, but Global Spirits, that's one stock which has been sharply languishing in trade on the back of its weak Q4 performance. The company managed to miss the EBITDA volume despite, the targets, and expects the Uttar Pradesh startup capacity to actually peak in FY27. In fact, Ashesha is here to break down the numbers for us.
Well, yes, very weak set of numbers as compared to estimates. So the BBG estimate for revenue stood at about 761 crores. It has come in at just about 632 crores in the fourth quarter. So revenue has declined by as much as 17% as compared to street estimates. So that's a big miss on all parameters. When it comes to margins, it has come in at 10.4% and estimate stood at anywhere between 12%. So clearly it's a big miss, not only in the revenue front, but even on the margin front that the company has reported in the fourth quarter. Revenue is down 3.5% YOY. Margins have contracted. Margins, in fact, have expanded, but they've still been weaker than what the street was working with. Now, the management had guided for EBITDA per litre to come in at about 7 rupees per litre, and it has come in at just about 6.2 rupees per litre. So even when we compare it to management's own estimates, numbers clearly look on the weaker side for the fourth quarter. Capacity utilization also dropped to 86% in the third quarter. From 86% in the third quarter, it came down to 80% in the fourth quarter. And the management now has guided for 50% volume growth in the prestige and above segment, but they are now saying that we could see some bit of decline going forward. So across all parameters, whether it is internals, whether it is volume growth, or whether it is management's own guidance, numbers clearly look weak, and that is the reason the stock is sitting with a cut of 10% in today's trading session.
Okay, Shesha, thanks so much for taking us through that. So some weakness on the charts of global spirits. That brings me to consumption as a pack. Sudeep, how are you reading the earnings within different pockets of consumption? On one hand, you've got staples started off really well, but then you've started seeing some slowdown in names like Dabur, largely inline. Rather, Britannia was also towards the weaker side. So on one hand, you have that. You have Alco-Bev, like Ashesha was highlighting right now, global spirits, and then you've got United Breweries as well, and then the entire discretionary basket, wherein Blue Star has come out with numbers. How are you looking at the earnings, and which sub-segment within consumption looks good?
Well, I think the entire consumption. You did talk about HUL, Nestle, and some of the other companies which came up with fantastic set of numbers. Not only they came with fantastic set of Q4 numbers, they also maintained their guidance for the next year, which is quite surprising considering that there are a lot of headwinds because of the conflict in West Asia, as well as the El Nino impact on monsoon. So, even if you leave that aside for the time being, I think my biggest concern going forward will be El Nino. Beyond the West Asia disturbance, assuming it gets resolved within within a short time frame, the El Nino-led monsoon disruption is definitely going to have an impact on consumption. So I am a bit worried, and I'll be a bit cautious on overall consumption theme at this stage. We'll have to wait and watch and see how the monsoon progresses before we can take a call on monsoon. Now, if I have to still go and buy some of the consumption names, whether it's discretionary or non-discretionary, I think I will probably veer towards some of the large FMCG companies only, because they have many more moods, many more wheels to kind of survive and navigate even a downturn. So I will probably still stick to a Nestle or a HUL if I have to face a slower demand or a rural demand shrinkage at this stage. Consumer discretionary, I will be a little careful considering what's happening overall in the economy and what is expected to happen over the next 2 quarters. So for the next 2 quarters, I'll be cautious of this entire consumption space.
Okay, cautious on consumption is the word coming in from Sudeep. Let's talk about some of the earnings reactions that we've seen in today's trading session. I'm just going to pull up some stocks from the Nifty 500 and see what the momentum is over there, because we are seeing some more pressure on the Nifty 500 index as we speak. On the flip, the stocks that are under pressure continue to be names like Dalmia Bharat. A CCL Products on the back of its tempered earnings is now lower by 7%. Aditya Birla Real Estate continues to lose a 7% cut over there as well. SBI, there has been no improvement even after the management commentary and that press conference that we were listening to. It is still trading with a cut of 7%, and Escorts is also lower by 6%. Kunal, any of these names that I just spoke about, Dalmia, CCL, Aditya Birla Real Estate, any of them looking like a good buying opportunity given the kind of dips that we're seeing right now?
Not really. I think many of the charts, for example, Dalmia Bharat sector, I think are still going through a very gradual kind of a correction for themselves in the charts. Yes, the pace of correction today has been slightly higher, but then buying this on dips could probably be something which may not work out very well, because the indicators have still not entered into a deep oversold territory. And specifically, we look out for indicators to either come back into an oversold territory on the daily charts or on the weekly charts in many cases. But they, if they don't happen to do that, then we expect the stock to go into a further gradual correction further for themselves. So I think in that context, I would probably just wait for maybe another week or if these stocks cool off by another 4 or 5%, that's where I would probably believe that you might sense next week somewhere that a better opportunity would arise into these names on buying on dips.
Okay, so that's on some of the stocks that are under pressure. But Kunal, on the flip side, if I take a look at the gainers from the Nifty 500, we've spoken about Firstsource. What about something like a Thermax? Good set of numbers coming in and currently a 13% upside on Thermax. Would you still be a buyer in this stock? And for people who hold stake in this stock right now, would it be a good time to book the profit?
No, I think it's a good time to hold on to the stock price. I've tracked the stock over the last 1.5 odd month. Specifically, the move it started off from 3,200 for Thermax, where the stock crossed its long-term moving averages. Comparatively, in 2024, the stock made a high of 5,500, 5,700 levels. So comparatively, even at the current juncture, the stock is still broadly 10%, 15% to 20% lower than its previous lifetime high levels. So I think in that context, the stock is still looking fairly attractive. You know, these are the kind of names which generally find a higher degree of carry forward up move. But what I think one has to look out for is that the major part of the short-term returns could be behind us for Thermax. There could be a phase, you know, just about the last couple of weeks. For example, the stock was into a tight trading range for itself, I think around 4,200, 4,100 kind of a zone. So you have to be ready for a phase where the stock may go into a pause. So it's better to try and buy this stock on marginal dips for someone who's looking at a fresh entry. But yeah, for someone who's looking at holding the stock price, I think it's better to try and trail the stop losses at 4,000, 4,100 and continue to hold on.
Okay, that's that on Thermax. In fact, you know, Sudeep, wanted to ask you as well, in light of what we've seen from, say, a BHEL of late, L&T's earnings commentary, and then, of course, the smaller plays from within cap goods and manufacturing as well. Is this the sector that one needs to be invested in for the longer haul?
Oh, absolutely. I am completely in agreement with you. I do like this sector, and I believe there are opportunities, and there are dips in the stock prices because of extraneous reasons. Probably is a great time to pick up these stocks to build portfolio for a long-term perspective. Look, I mean, I've been talking about L&T for some time, and I continue to maintain my view that, you know, this West Asia crisis, which led to a price correction in L&T, is definitely a great opportunity to accumulate the stock from a long-term perspective. You know, West Asia crisis will get over. It's a matter of time. L&T will get back to its business and growth trajectory. It also is developing a defense business within itself, which again is an area to look at now. You know, domestic business is growing and continuously the scope for expansion is there. While international business was margin accretive and they had focused on international business, this West Asia disruption has led to some profit compression in the last quarter and probably next couple of quarters. But beyond that, I see fantastic future for L&T. Similarly for BHEL and Thermax and many other companies which are focused on cap goods. I also like some of the other you know, power-related cap good players like GE Vernova. I think the international business opportunity which the parent companies will bring will add a different dimension to their business. So we need to look at this entire cap good space very, very thoroughly and start picking up stocks if you don't already have.
Okay, so that's on the entire cap goods space. Just taking a look at some of the Nifty earnings next week. It's going to be a very pharma-heavy week because you've got earnings from Dr. Reddy's, Cipla over the course of next week. And then in terms of metals, it's JSW Steel and Tata Steel, along with a Bharti Airtel and Tata Motors passenger vehicle. So these are the only Nifty earnings next week. Of course, from the broader end, the entire barrage of earnings that we've seen, that continues into next week as well. But Kunal, anything looking good from this pack, either, let's say, on the pharma front or the steel name?
Yeah, I think Sun Pharma is something which looks attractive at the current juncture. Dr. Reddy, in fact, I think is going into the results on a somber note because, you know, that news which came out for Dr. Reddy, I think a week back or a couple of weeks back, where the stock jumped up 6%, 7% on a single day. Post that, we've actually not seen a major follow-through for the stock price, which means that maybe I think traders are going in with an anticipation of slight bit of a disappointment, which could happen, you know, because of the results. So unless the results surprise, I think Dr. Reddy's could be something which could remain a little bit more subdued on the short-term charts. Sun Pharma, on the other hand, I think looks fairly attractive on the longer-term charts. The breakout, the stock has shown about this 1800 mark. And the kind of volume push which you've seen in the last 2 or 3 weeks has changed the texture for the stock over the medium to long term. From the middle pack, JSW Steel, I think the stock has a lot of potential, But somehow in the last 1 to 2 weeks, again, the stock has gone to a 40 to 50 point range, 1240 as a support for JSW Steel, 1280.85 as a resistance for the stock price on the spot level. So we'll wait for that breakout about 1285 mark for JSW Steel, and that's where I would believe that a better trade would emerge. And from those levels, we could be looking at even 1340 to 1360 as a near-term target range for JSW Steel.
Okay, that's that on what we're seeing in terms of some of the active movers in trade. Let's just see how the weekly performers have really been and what some of the key individual sectors and stocks have done. If we can just fire the over the week charts, and that's been the Nifty performance. While it's been a fairly volatile sort of week for us, we're closing in around those 24,200 levels, which I would say is not really all that bad, so to speak. It has been choppy, but on a net basis, we've done okay. Nifty Bank, that's been the bigger casualty, and especially after days like today, where you've seen weakness of about 740 odd points on a net basis, 55,300 thereabouts is where the Nifty Bank is shutting shop. And then, of course, there's been the feather in the cap, the Nifty mid-cap, which managed to hit a record high for itself as of yesterday. A lot of earnings reactions, that's what's typically been the flavor all through this week. And then, of course, sporadic moves by banks, the IT sector, and the oil sensitivity, that also continued. The one good thing that we saw this week was that it seems that we're closer at least to some sort of resolution to the Middle East crisis, at least. And you saw that reaction come by in oil prices as well, wherein as of yesterday, you did see Brent dip below the $100 per barrel mark for the first time in many given days. So it's giving you a little bit of confidence, at least. Of course, traders and investors alike want to go in light over the weekend because you can't really predict the news flow that transpires thereof, and which is why this serious bout of profit taking. You can see SBI has fallen now 8% in trade. Dalmia Bharat is down 8%. Britannia is down 6%. Blue Star is down 3.6%. Lupin as well going weak into the weekend with a 3.5% kind of loss. But on the flip side, an Asian Paints, Tata Consumer, HCL Technologies, Tech M, Infosys, these have all been some of the standout performers, and Nestle, Bharti as well added to that list. Sudeep, in fact, I wanted your take on how you're approaching IT right now. Of course, there's been a standout performer like Coforge, but the earnings well digested. Would you want to give IT another chance? I mean, at least are the indicators turning some amount of hope?
Well, I'll still be cautious, Aisha. Yes, some of the IT companies definitely are doing better than others because of the strategy which they are adopting as far as AI is concerned. And that's very clear. And HCL, which is moving into AI in a very, very aggressive way, or a Coforge, which is going the acquisition route to build AI capabilities. So there will be multiple approaches to perform in this AI-led world. But I think overall Indian IT companies are still some distance away from coming out of this entire disruption. So I will be generally wary of IT companies. I think the valuations are not cheap. Yes, it has come down significantly, but if you look by the yardsticks of the world stocks, or even based on their earnings, I think the valuation is not cheap yet. So I will wait and watch, selectively picking up stocks based on their unique performance or unique attributes can be looked at.
Understood. On that note, Sudeep, Kunal, thank you so much for your time. Let's start winding down for the day and for the week. For the week, you have Nifty 50 that's absolutely flat, ending the week with an uptick of about 0.2%. The small cap index has been the real outperformer with a 3.5% uptick in the mid cap 100 that, remember, hit a fresh record high in Thursday's trade, that's yesterday, is up 3% for the week. But on an intraday basis, it's a 0.6% cut coming in for the Nifty, and you have only a handful of sectors in the green, led by IT, consumer durables, FMCG, chemicals, and everything else is in the red. And the biggest cuts we're seeing on PSU banks, of course, on the back of SBI's numbers and the street's reaction to it. That stock was lower by about 7%. On the flip side, Titan, the other Nifty company that came out with its earnings, good stock reaction, up about 5 or 6%. So these are some of the biggest movers from the Nifty pack. If I take a look at what the broader end of the market has done, Mixed moves coming in over there as well, but the favor today has been, but the tilt today has been in the favor of the declines with CCL Products, Aditya Birla Real Estate, Dalmia Bharat, Urban Company, Escorts, Acme, all of them being weak. Urban Company's numbers also just came out, a 6% cut on that stock. On the flip side, Firstsource Solutions and Thermax on the back of very good numbers. Nuvama, Sonata Software, MRPL, Coforge, SCI and Electra Green along with the Dr. Lal PathLabs have seen gains above 5% and till all the way up to 15% on some of those names. So looking very good for the market in terms of what the Nifty 500 move has been for some of the names. But overall, it's been an absolutely sublime day of trade for us, you could call it that. 0.6% lower for the Nifty. We're shutting shop with a cut of about 150 points and around the 24,180 level. But okay, let's also take a look at the Hyundai numbers. We've got that. Just trying to see what the stock reaction on that has been, although the markets have closed for the day and for the week now. We'll take a look at that in a bit. But that's Hyundai Motors numbers flashing on the bottom of your screen. A slightly mild reaction on that stock when the numbers did come. But on that note, we're completely timed out on this edition of Closing Trades. From Aisha, me and the team that put this show together, thanks so much for tuning in. But you stay logged into ET now for more news and updates.